Welcome back to our weekly wrap-up. I'm your host, Joshua Ma from the Asia Private Equity Center. It has been a week of telling developments across the board, with each market in Asia offering differing and yet compelling opportunities to investors. Let's jump right in. We kick things off in China. Although the private equity market in China operates very much detached from the rest of Asia, its major movements continue to capture global headlines. This week, we watched the debut of Unitree Robotics, the company which develops humanoid robots capable of performing outstanding movements, made its stellar debut on the Shanghai Stock Exchange Star Market, raising 6.1 billion RMB. The breathtaking hike of its share price, surging about 460% on its first trading day, has absolutely been the talk of the town. Staying in China, we also saw another major buyout in the gaming sector. Trustar is set to acquire Alibaba's game development unit, with price tag landing between 1.5 billion and 2 billion US dollar. This comes just 5 months after ByteDance sold its own game studio to Saudi Arabia's Savi Games Group for a whopping 6 billion US dollar. Turning to India, we're seeing an interesting divergence. A recent survey by Bank of America found that India is currently the least preferred public market in Asia. Yet, its private equity market has proven to be a draw for investors. Case in point, US-based Singular Gulf just raised 500 million US dollar for its latest India-focused fund, effectively doubling the size of its predecessors. Furthermore, the India arm of South Korea's Mirae Asset Venture Investment has secured around 118 million US dollar for the initial closing of its latest India fund, which has a target size of 188 million US dollar. For private equity investors, India's stock market remains a steady source of distributions, which we all know are existential to fundraising results. During the week, a host of IPOs successfully returned around 39 billion rupees, or 409 million US dollar, in aggregate to a pool of investors. Moving down under, we must also mention the robust private equity dynamics in Australia and New Zealand. EQT has been tireless in sewing up deals in the regions and has just acquired a majority stake in the National Rugby League team, the Melbourne Storm, for a reported 150 million Australian dollar. Additionally, FN International took a majority stake in the New Zealand Clinical Research Group. This marks the PE firm's second deal in the region since opening a Sydney office in 2024. Meanwhile, heavyweights like TPG and Pacific Equity Partners are pursuing directly or indirectly their own separate target assets. Moving to Southeast Asia, the Singapore-based Kembangan Capital Partners, a firm founded by a former executive at Temasek Holdings and Pavilion Capital Holdings, has raised 725 million US dollar for the initial closings of its latest fund, thanks to an unnamed sovereign wealth fund which anchored this fund. Looking ahead, a key trend is emerging amongst China's homegrown firms. After having established the presence outside of China, these GPs are gaining the confidence to raise US dollar funds. Hongshan Capital Group is currently raising a US dollar 1.2 billion fund, notably its first US dollar fund since separating from Sequoia Capital in 2023. Qiming, Zhenfeng, and Yunfeng Capital are also raising their own US dollar fund. All of these moves are strong indications that a pool of China's domestic firms are ready to compete on the global stage. And that's your recap for this week. Thanks for tuning in, and join us next week for more private market insights. For more content like this, please subscribe to listen to our daily summation or visit our website at www.asiape.com.